What's up, everybody? It's Rashid and Christian here, back with another banger episode of the 4F Podcast. And today's episode, I'm going to teach y'all tax evasion.
Whoa. We're not going to teach y'all tax evasion. What we are going to teach you is how to legally avoid paying taxes and why it's your responsibility to pay the least amount of tax possible. So people like Elon Musk and Bezos, they get a lot of criticism. But think about it. If you made $1 million, right? And the government knocks on your door and they're like, hey, we need 30%, right?
Insane.
Are you going to be happy about that?
Nope.
No. But what if they're like, okay, but here, you see this in the tax code. Sit down, let me show you this. If you buy real estate, if you invest in agriculture or energy, you can go from us taking 30% from you and you only got to give us 10%.
You know, it's so crazy though. A lot of people don't even take the time to even read the tax code.
And the thing is, you don't actually have to sit down and
read
physically
everything.
read the tax
you
code
don't have
because it
to.
updates very often. There's an excellent book called Tax-Free Wealth that talks about how saving money on taxes can really, really compound your wealth. And that's how these people become billionaires.
That's
because they're tax efficient.
Right.
If you make, it's not about how much you make, it's about how much you keep.
How much you keep. That's a great thing to say, bro. Like, I know a lot, like I said, a lot of people, like employees especially, they're getting, bro, like we were talking about that earlier about like how deductions and stuff are and how that work. They're taking he's gonna get on the whiteboard, he's gonna discuss some stuff for y'all too on top of that. But y'all gotta listen, like y'all gotta hear me out on this. Like, okay, let's just break down like what a typical employee check would be.
Yeah. All right, y'all. So let's say you work at a manufacturing plant, or let's say you work at a restaurant, right? And let's say you bring in $4,000 for the month, right? So $4,000, and we're going to put an E for employee. There's something called the cash flow quadrant. We'll get into that. So for the E, as an employee, you have $4,000. Let's say you pay 20% to the Fed, and then you also pay, let's say, 15% in Social Security and Medicare, right? So that's 35%. All right. So Rashid, let me grab my phone, and we're going to do 35% of 4,000.
Yeah.
All the smart people out there probably already calculated.
They already got the answer.
That's 1,400.
Yeah.
So that's a lot of money out of your 4,000.
That's a lot of money, guys.
So now you're only left with, what's that, 2,600? Minus. Yeah, 2,600. Yeah. So now you're only left with 2,600. But let's say you own a cupcake store, or you own a car detailing business, or a lawn care, anything, real estate, right? Let's say this is rent. If you have an S corporation, right? So we go from E to B, or let's not even say S corp. Let's just say you have an LLC, right?
Right.
You can still be in the B quadrant, in the business owner. So, and like I said, cash flow quadrant by Robert Kiyosaki talks about this. So you make that same $4,000, right? Okay, so here's how you're taxed as a business, right? We're going to talk about S corps especially right here. So what happens is you keep your money essentially. So as an employee, you pay the government after you get paid, and then they give you what they think you deserve come tax time, right?
Yeah.
As a business owner, you keep your $4,000, give or take, different taxes and fees and stuff, but we're going to get into that. So your $4,000, you keep that, and then come tax time, after all of your deductions, you then pay the government. So what we're going to do is we're going to say 4,000 times 12. What's that like? 4,000 times 12. 48,000.
48,000.
And let's say this is all earned in a business. So what you can do is, this is earned in an LLC. So let's say you have 20,000 for the cost of, let's say, equipment. Let's say you got another 10,000 in other write-offs. So let's say you got 30,000 in tax write-offs. So what you do is you subtract your tax write-offs, your business expenses, and let's say you take a couple trips and stuff like that, business meals, all those tax write-offs. So now you take your taxable income from 48,000 down to 18,000.
Crazy.
So now you're only taxed on your 18,000. And then we'll say that's with an LLC, right? This is where it gets really good.
Mm-hmm.
Once you make enough money to pay yourself what's called a reasonable salary, let's say $100K. All right. So we're going to do S Corp down here. Let's say you make $100K eventually. This is what you should be striving towards in business, to eventually go to S Corp. What you can do, let's say $100K, you pay yourself a reasonable salary. So you go from $100K, and this is all business income. And what you do is you pay yourself, let's say, a reasonable salary of $40,000. So now, instead of being taxed on this entire $100K as an employee, let's say you have a great job as an engineer, a dentist, anything like that. Well, you're going to be getting that 35% of
$100K.
So you're going to be saving. You're going to be getting taxed $35K. But now over here, the government's only seeing your salary is only $40K.
40K. Yeah.
So 35% of $40K. We're back to, what's that? 35% of that for $1,400 times 12. Times 12, we're at $16,800. So you go from paying $35K, making $100K as an employee, to, if this is business income, you pay yourself that $40K, keep the other $60K in the business, and you're taxed on the $16,800. And you pay taxes on the $100K, but you don't have to pay the 15% Social Security and Medicare tax. So your tax rate here is only about 20%, give or take. So you're still saving a lot of money, essentially. Right. So hope you were able to keep up with that. I know it's a little bit all over the place.
Bit all over the place, but we made it to the end and showed you what you need. So let me ask you this.
Yeah.
So for the average person, why is this so important to do, though?
Yeah. So this is really important because you should try to minimize the amount of taxes that you pay so that you can have more money for security, so that you can give to the things that are important to you, charitable contributions. Because if you look at what the government does with your money, I know me personally, I don't agree with a lot of the things.
I don't agree with a lot of stuff either.
So, hey, if you just love Uncle Sam. And
I don't think nobody that watches our podcast love Uncle Sam. Y'all trying to elevate past that.
Facts.
And it's a way to do that. And like I said, it's like I said, and it's legal. Like it's literally legal. Like,
but what do you think about, so like I hear this a lot, like corporate greed and make them pay their fair share, and that's kind of part of like Kamala's whole platform.
That is a part of
like she has some good points and some bad points, but the thing is that there's a tax code and it's not meant to be fair.
Oh, it's not. It's literally not meant to be fair.
It's literally like everyone knows that like the tax code's not meant to be fair. Life's not fair. Business isn't fair. If you open a bike shop and I open a bike shop down the street and I start getting more sales than you, I'm not going to go, oh, I better just take a day off because I better give Rashid a chance. That's not how business works.
That's not how business works, bro. Business is cutthroat regardless, bro.
Yeah. One more thing though, and then I'll pass it off to you. So this is something that I had a really great conversation with a family member, and they told me this was considered trickle-down economics. I don't really think so, but I'll just tell you what I learned how the tax code worked from a professional tax advisor. So they told me that you are incentivized with your taxes to invest in three things: housing, energy, and food production. The reason why the government incentivizes those things is because those three things are vital for national security.
They are vital for national security.
If no one has a house, everyone's going to be unhappy. If there's no food security is one of the number one things for national security. And then energy, look at whenever Russia invaded the Ukraine, all those countries in Europe like Germany, they were screwed because they weren't energy sufficient, right? So if you as an individual can put your money to encourage the development in one of those three categories, you get major tax breaks. One example, oil. So 100% of the cost of oil exploration is tax deductible. So let's say you put $100K into an oil drilling operation, right? And that $100K, let's say they don't strike oil for a couple of years. Well, you're able to write off that entire $100K off of your salary, off of your own income, 100% of it, which is huge. Some people think that's unfair, but you're going to be pumping the gas that oil gets out of the ground.
And that's what like Trump did. That's his whole thing is like he utilizes the tax code and he used it to his advantage. Like it's there for all of y'all. Like I said, like what's that book you're recommending?
Tax-Free Wealth.
Yeah. Because like I said, like I know y'all and like me as well. I'm not going to sit there and read the whole tax code. Like you said, it's so ever changing. So if you said that's a good resource for them to check out. Yeah. So y'all check that book out too if y'all like trying to learn the tax code and everything. So like
the quadrant too, the cash flow quadrant.
The Cash flow quadrant. You explain that again one time?
Yeah. So, like I said, over here, y'all, we got the E for employee. We have the B for business owner. Now, let me finish out the quadrant for you. So I'm going to go ahead and clear up some of this.
Yeah.
So there's 4 parts of the quadrant. So in the top left of the quadrant, you have E for employee. Over here in the top right, you have B for business owner.
Right.
But below employee, you have self-employed. So, Rashid, could you write an S right there for me, brother? The marker's right over there.
Yeah.
Yeah. So under the E, you have S for self-employed, which isn't bad. It's a step towards the B category. So a self-employed, think of your doctor, right? The guy that shows up to the office. You have a job still,
right?
You know, but self-employed, you pay 15% self-employment tax.
You do have to pay self-employment.
You actually end up paying more taxes as self-employed than an employee. And the unfortunate part is most self-employed people are, you know, the middle class, you know, your plumbers. Yeah. This is how the middle class gets screwed. Why is there a self-employment tax? That's bullcrap.
That is bullcrap.
Anyways, and then over here we have I for investor. So this is the golden class. So this is the tax flow quadrant. One more time for y'all who don't have video. We have E, S, B, and I. Employee, self-employed, business owner, investor. So you start off here in E. Most people go down to S. Then you go to B because now you've built your, let's say you're a plumber, right?
Yeah, you built it up. And now
you're gonna start. You got plumbers on the road for you. Now you can go take that vacation. So now you're over here in B, and now you go over to I, and now because you're putting, let's say you got 100K net income at the end of the day coming in from your business. Now you start putting that into stocks, real estate, different things like that, and that's where the real money's at because then you can sell your business and put that into more cash producing investments. Like government security bonds, 5%, dividend investments, things like Coca-Cola, 3.5% dividend, or an apartment building that will get you 10% return net, you know? So let's say your entire portfolio, let's say you got a $1 million portfolio, and let's say you got it spread out through dividend stocks, real estate, everything like that. Let's just say your net return is 7%. Well, then you're going to get 70K in 10 months. So that's like that's 84K in a year. So you're living off that.
You're living off that.
So that's the thing is most people start in the E. Yeah. And cool. If you can go straight in from E to B, you can do it.
Yeah, you can do it.
You can do it if you want to because you're gonna have to save a lot as an E. Then you buy the B, right? Because to be in the B category, you're not working in your business, you're working on your business.
On your business, yeah.
Right? Or if you're a real baller, you can really just go straight from E to I.
Yeah, if you're a baller, you got some cash.
If you're a real baller, which is kind of what we're trying to do.
That's what we're trying to do.
We're doing B too, but like, of course, you know, with real estate, it's a business, but it's really an I activity.
It's an I activity.
So there's different activities. Are you doing an E activity? Are you doing an S activity? Are you doing a B activity? Are you doing an I activity? Yeah. You know? So I can see the really light bulb.
Me too. Yeah, like I said, guys, I'm all for learning. He taught me something just here.
Yeah. This is a Cash Flow Quadrant by Robert Kiyosaki. Excellent book. And you know, the thing is like, I don't think anyone should be bashing people. Like if you're over here in the E quadrant,
don't be bashing people.
Well, it's like, dodging taxes and everything, like tax evasion. It's like Elon Musk, you know, in 2022, he paid $7 billion in taxes. Even if that was only 5% of his income, right? Let's say his effective tax rate was only 5% or however much. He still paid $7 billion.
$7 billion.
You know how many schools and hospitals and the military,
all the stuff he didn't help out.
All the stuff that he just helped by doing that. Like the thing is he didn't just wake up and say, "Oh, I'm just going to pay 7%." No, he built a multi-billion-dollar company that allows people to drive to work, that saves the environment, all these different things. So there's a reason why he's paying 7%. There's a reason why Jeff Bezos is paying a low tax rate. He built Amazon.
He built Amazon.
I use Amazon Prime all the time.
Me too.
You know, so like there's a reason why people, and I'm not saying that tax fraud is good. That's obviously a crime. If you cheat, you're a loser. You're not playing the game right.
You ain't playing the game
There's a code and there's a legal way for you to legally lower your tax rate and save hundreds of thousands and even millions of dollars a year. So any other questions or any other pointers on this, brother?
Nah, man, I think you covered everything, man. Well, listen, y'all, if y'all enjoyed this video, make sure y'all like, comment, subscribe. And I appreciate y'all for tuning in to another episode of the 4F Podcast.